I shall confirm. Yes, we are live. In Nige Report, we are streaming live now. Volume, are you aware?
Ladies and gentlemen, welcome to the Black Business Growth Initiative. May I ask all our panelists to switch on their videos? My name is Sazin Ndwandwa. Ladies and gentlemen, welcome. My name is Sazin Ndwandwa, and I wanted to welcome you to this event, our live event. This is the last event for 2021. We will be seeing you again in 2022, but this is our last event. Now, we said the last time we talked to you in October that we'd be doing this live face-to-face. Unfortunately, we have not been able to deliver on that promise. But rest assured that, in future, we shall definitely endeavor to do so. Nonetheless, what I'd like you to do now is just take a moment to pause, to invite all the people who would be interested in this topic. We are talking about funding and support for small businesses. So if you watched the first event where we talked about funding, the National Empowerment Fund was here, Edge Growth was here, Alumni Energy Investments was here. They talked about funding for small businesses, the do's and the don'ts. They gave some advice. You got a chance to express some of your concerns and frustrations and questions. We are carrying on with that topic right now based on your request. So take a moment, pause, invite your friends, your business partners, other people that you think would benefit from this event. We're going to take about a minute to do that. So please use this opportunity to share with those people who in your life are going to benefit. Thank you. Okay, let's get started. What I'm going to do now is I'm going to introduce our panel members who are going to, just show their videos. First, we've got Cuma Dube. Cuma will introduce himself just now, and then we've got Mr. Buchule Sibhaca, who's also going to introduce myself. Now, I want to pass apologies for Unomfundo Fakudze, who was supposed to be one of our panel members today, but unfortunately, she has not been able to join us because of a personal health emergency for someone who's quite near and dear to her. So our prayers and our thoughts are with them as they go through this time, and we hope that everything will be fine when she updates us on the current situation. So without further ado, gentlemen, Cuma, firstly, just to tell our audience out there a little bit about yourself, your background, your name, where you are, those kind of things. Thank you.
Should I go first? Yeah.
Go for it.
Good evening, everyone. Thank you, Sazi, for the invitation and for the platform to have this conversation. My name is Cuma Dube, and I'm here in my capacity as principal of the Bbgi Impact Fund, which is a BMF initiative. Background, began, and we'll get into what Bbgi Impact Fund is all about in our conversation here this evening. Background, I started off in law. I've got an LLB, and then moved on to sustainability and ESG, and been working quite a bit, both with corporates as well as businesses within the space we're going to be talking about along the funding, in the funding landscape. So your private equity firms and your VC firms, more specifically about ESG integration into their investment processes. And all that means is that considering environmental, social, and governance issues when making an investment decision, or when planning for the future and the future of the business, so that the business is sustainable in the long term. And also an impact management professional, leading the business sustainability team at Bazaars. And we help corporates as well as financial institutions around their sustainability from the reporting side. Again, the consideration of those ESG factors in how they make investment decisions, and also communicating what their impact is. And we'll talk about that when we describe the impact fund in a little bit more detail. And I've been asked then by the BMF, the impact fund is a BMF initiative, to build or to establish this fund, which is an early stage impact investor. And our impact focus, and some call it impact areas, are aligned to the mandate of the BMF. And I'm in this space, quite passionate about sustainability and ESG. It was the topic of my MBA thesis, because deployment of capital in a way that moves the needle on some of our key socioeconomic issues and challenges, I think, is how we create sustainable societies moving forward and into the future. I'm excited to be here and to have a chat about how we access some of these facilities, and how we build businesses for the future. So thanks again, Sazi, for the invitation.
Thank you so much, Tuma, for that brief but very loaded introduction. I will be really interested to hear about some of the interesting and topmost findings from your thesis at some point during our chat today. Hopefully it will come up as you talk later on. Now let me move on to Buchule. Buchule, can you just give us a brief introduction about yourself as well, your background, what you do, any other thing that you think will be interesting for us to know that you'd like to share with us about yourself?
No, thanks, Sazi. Maybe first and foremost, want to greet all the viewers and listeners out there. Thanks for the opportunity to engage with you and have a conversation with you around, I think, what I think is one of the most important topics we should be having right now as SMEs, especially right after COVID. So my name is Buchule Sibhaca. I operate as a tax professional or a tax expert. I've been qualified with a master's degree from the University of Cape Town. I then started what is now known as SM Tax, which is effectively a tax consulting and digital accounting firm. Through the years, of course, we've developed and refined the business model, and now offer a lot of pre-investment and post-investment support services to funders out there, like the likes of Old Mutual through the Masazane Fund, Standard Bank, ABSA, a funder, and a few other funding institutions. So I think from my side, I'll be brief, and I think as we conversate throughout the journey, you'll get a sense of the work I do at SM Tax, or the work we do at SM Tax, and obviously some of my passions around small business development. So I'll leave it there, and then hopefully, guess as if I did miss anything, you'll ask me those questions.
Awesome. No, thank you so much, Buchule. What I'm going to do now before we, kick off the conversation is I'm going to share a bit about what the Black Business Growth Initiative is all about. Okay, so I'm hoping that you can see the screen that I'm sharing, but either way, I'm going to talk to it. So what the Bbgi is about, and if you've been watching our videos and been watching our events and you've been joining us, and if you are one of those people who are privileged to have been part of the journey since March 2019 when we started and we were face-to-face at that time, our vision really is that we want to build a community of like-minded people that seeks to see its Black members grow in every aspect of their lives. And when we say in every aspect of their lives, we're really saying that we don't subscribe to the idea that you must sacrifice your health, your family, your relationships, so that you can achieve your career goals, and you basically put all your eggs in that one basket. But we want to see growth in every aspect in your lives, because as a community, that is important for us, because we're not just building for today, but we're building for the future as well. So you will see that, as the year rolls on, with each month, we come up with a theme. So for instance, in September, we talked about heritage, and therefore the aspect of legacy. When we talk about Mandela Month, the aspect of history and contribution. When we talk about, Women's Month, the aspect of balance and diversity and equality and equity is very important to us. We stand also for unity and collaboration. And what we say by that is that, there is more than enough for everyone. Many of us, we have been raised in a way, or educated in a society that says that you have to be better than someone else, that you have to compete for everything. But we say, that's not always the first point of call. If we look first to collaborate and work with each other and share these abundant resources that South Africa has, then we will probably get much better, because then we can work from a position of unity. And what is critical for that is that we have good intent towards one another. We are able to celebrate other people's successes, knowing that they do not in any way defer or diminish our own success. We also talk about continuous growth, which I've spoken about, but the idea is that we're looking for our people in their careers, because we are for professionals who are Black and for business owners who are Black. So in your career, in your business, we want you to see you growing in whatever way is important to you, whether it's a promotion at work, whether it's the income that you're generating for your family, whether it's the amount and the depth of knowledge and expertise, whether it's the demand and the value that that you carry in the marketplace where you offer your services. We just want to help you and to see you grow. And I think the other aspect of it is the excellence. We're saying that we're looking for excellence, not necessarily saying that we want perfection and people shouldn't make mistakes, but we say when mistakes do happen, we want us to own them and to take steps to address them, to make sure that you don't repeat the same mistakes over and over again. So when you are supporting a Black business through this community, we want you to give feedback of, say, I've used this person and this business, this is the experience that I've received, the good things and the things that need improvement. And that supplier or that service provider as part of that committee will take that feedback and improve their service or their offering. And then the last one, which is very important, is around personal responsibility. And we're really saying that no matter whose fault it is that South Africa is the way it is, the amount of inequality that we see when you land, for instance, if you are in Cape Town like me, you land at the airport and you drive home, all those squatter shacks and all those poor living conditions, they give us an indication that South Africa, that dream that is post-1994, it is not yet 100% fulfilled. Those of us who are in the position and have been able to access opportunities that we wouldn't have been able to access before 1994, perhaps our role in history is to make sure that we pioneer and we demonstrate for those who are not yet where we are, that this thing is possible, especially if we unite, we work together, we focus on our growth, we take personal responsibility for what is our lives. So that is it on the Black Business Growth Initiative. There's much more that I could say, but I'm going to stop there. Okay. Now, we are talking funding. And if I take it off from the previous conversation that we had, some very key things that came up. Some, for instance, there was a conversation that says, when you are looking for funding, right, make sure that you do your research. You must give credibility to the funder that you're approaching, that's number one. You are a person who is honest. If you don't know something, you're going to say, I don't know. If you give figures, you're not going to give figures because you think that's what people want to hear, but you're going to give figures according to your credible and your calculations that you've seen and the information that you have. And that's the other part of it, is that you need to do thorough research. You are honest, one side, that gives trust and credibility to someone who's going to fund you. On the other side, you have done your thorough research and you know what you are talking about. Therefore, they look at the teams that you would bring, as part of your funding application. Many of them look at the track record as well to say, have you been around for 2-3 years? Are you already making some money, and therefore you coming to us to actually expand what you've got? And then there was also a conversation where Ushakes challenged the funding industry to say, there are very few people who want to take the risk of funding ideas before the revenue comes in. There are many good ideas where people just have a good idea, they know how to do what they do, but really they don't know how to run a business. And therefore they also need that support. And if we don't give those ideas a chance, we might lose out as a society. And he was very vocal around, looking at not only the profitability of the funding decision in terms of how we're going to make our money back when we fund these businesses, but also the impact that it will have on society. And I think with those words, I'm going to pick up other aspects that came out. I'm going to jump straight to Cuma, because that aspect of social impact is something that he touched on. And I'd like him to maybe talk a bit about that in the context of Inseka Impact Fund. So Buchule, over to you. Tell us a bit about Inseka, and also be sure to delve into the part about the impact side of it as well. Over to you.
Yeah, sure. It's an easy one to get started off with. So thanks, Az. So yeah, with Inseka Fund being an impact fund, what we have to communicate to the market, and that's both the demand side, which is your companies that are looking for funding, and the supply side, which are the investors who would invest in a fund to be deployed to that. You need to communicate quite clearly what kind of impact that it is that you want to make. And then how we have done that one is by crafting something that we call a theory of change. And what that ultimately means, and I think this is always a great way to introduce the fund to the market, is in terms of what our theory of change is. What it means is that by investing in the way in which we do, and the way in which we have articulated our investment philosophy and our investment thesis, we want to play in this market, writing this type of checks to businesses, looking for these kind of businesses who operate in these kind of markets, because we want this ultimate outcome. So that's the framework that we're working in. To be more specific, when it comes to Inseka, we are an impact first early stage investors. So we're looking at the guys with great ideas, who have communicated with their prospective customers or consumers or clients, and they understand the pain points of those. And they've developed a solution to those pain points. They understand the problem, they've come up with a solution. They've communicated that solution with the consumers, and consumers have validated their idea. And they need to begin either building the product when you're talking about technology-enabled businesses, or need help in terms of going to market with this particular product. So we're really early stage. In the tech ecosystems, it would be called angel or pre-seed rounds of funding, where we want to get involved. And in terms of the other aspect that we look into, other than the business, where how well it's understood the problem and the solution is designed for that, for consumers and customers, is the fact that what kind of socioeconomic indicators does this then speak to, this solution for that particular market. And these then we relate to our impact areas. And as I said in the introduction, our impact areas are aligned to the mandate of the BMF, the Black Management Forum. To go into a little bit more detail, what that means in practical terms is that, are these businesses serving underserved or unserved markets? And in the way in which they're serving those markets, are they providing access to goods and services that those markets previously did not have access to? That might be access to financial services, access to education, to healthcare services, to information, and those types of goods and services as well. The second is that we deal with a high unemployment problem. And so are these businesses as well building platforms that either connect people to opportunity or enable entrepreneurship in a way that is affordable for those markets and scalable and repeatable across various regions within our country. And also, are these businesses either competing or trying to compete in formerly untransformed sectors of the economy? So are these guys who just need a leg up, who can leverage perhaps the BMS network of corporates or its branch networks to truly compete in sectors that are formerly untransformed, or to be connected into those value chains so that they can grow as businesses as well? And so in very short form, those are our impact areas, or the social economic indicators that we'd like to move the needle on with this deployment of capital that we want. And so that is the underlying philosophy around the fund. Get in early, because that's where we see the most need is in terms of when we look at the funding landscape. And I know we had this conversation in the last session that you had with Edge Growth and with the NEF, and that we really don't have enough early stage investors. So that's where we want to play. And that's where we think we can come up with the kinds of frameworks and tools in relation to the supply side, so investors investing into the fund, where we can leverage things like blended finance, where we're looking at DFIs to come in and assist us, but mixing that with some private capital into a fund that will generate economic returns, but also have an impact along impact areas with indicators that are clear and easy to understand, so that we can communicate what that impact is. So that's the intention around the Bbgi Impact Fund, is to find Black-owned businesses that are serving underserved markets, that are providing access to goods and services in markets that ordinarily do not have them, that enable that are trying to compete in formerly untransformed markets, that are enabling transformation or providing access to opportunities for people to be able to move some of those indicators in their own lives, and who just need an early stage partner who provides capital, yes, but also who can add additional value to their businesses post-investment. And in terms of the check sizes that we're looking at by our assessment, anything between $1 million and $5 million is the intention to get involved. So just before the 5 to 30 of players like your Edge Growths in the market, but also enough to get the business off the ground, whether it be fleshing out an MVP for tech-enabled businesses, and an MVP is a minimum viable product of that for further validation, or getting or accessing a new market segment within the market segment that they're already operating in. And our hold period is for the fund life, we have a 5-year investment period and a 5-year divestment period. So we are patient capital to a large extent. And I think I should pause there for the time being, and we can get into a little bit more detail in terms of the instruments. But there's quite a few that we have in mind to use, and maybe I can just name them for now, both on the equity and the debt side. We want to do your straight equity plays or convertible notes. We're also open to doing safe agreements, which is just a simple agreement for future equity, and some mezzanine finance where that is appropriate. But our approach is always to take the business as is and make an investment decisions based on the needs of the entrepreneur and what would be in the best interest of the business model and the solution that they're trying to bring to market.
Thank you. Cuma, this is exciting, man. And I think, what I want to appreciate as well is the fact that when you catch yourself using an acronym or jargon, you explain it, MVP, right? Most valuable player, like minimum viable product, something, the minimum thing that you can take to the market that people can use, right? You don't have to build a whole tower. If you can build a 1-story building for now, and people can use it, and then you can extend it later. So I appreciate it. Let's keep that going as well. And when you talk about some of the instruments later on, I think that's something that we're going to keep in mind. So Buchule, you come in it from a different perspective. And by the way, to our audience, I've apologized for Unomfundo. She was supposed to be here. I've said why she isn't here. We haven't chased Upilani and Ushakes away. They both couldn't join us today because of traveling schedules in various places. But also we thought that the people we're bringing today, from the comments and the discussions that we had, Cuma is talking about the fact that they get involved as Nsika earlier on, which is something that we raised as an issue. So, Cuma is relevant from that perspective. Ubutula, I'm going to allow him to introduce himself as well, because he comes at it from a different perspective in addressing one of the issues that I think particularly Unomfundo raised. So Buchule, over to you. From a funding perspective, tell us a little bit. You talked about pre-investment and post-investment. Tell us a little bit about how you get involved as an accounting and tax firm, especially in terms of how you work with the different funders. We talked about Old Mutual, Standard Bank. Over to you.
No, thanks very much, Sazi. So I think maybe before I do that, maybe I must maybe paint the problem that funders have, and then also try to marry up that problem with what SMEs have. So funding in South Africa, I think generally across the world, is the framework hasn't changed much over the past couple of decades. And so basically what you have normally within the context of debt funding, even so with equity-based funding, but different parameters, is that they look at the strength of the existing business. And so the first way to look at the strength of the existing business is to look at key risk matrices around the financial risk. And to look at the financial risk, you need things like your financial statements and management reports. So, and then being able to then go further to assess other risk areas like your legal risk, your performance risk, and so forth. Now, in order for a funder to do this, they have a list of requirements that they would list. Normally, a list is if the list is less than 10 items, that is a very good funder. But normally, the list is quite strenuous, and certain items of those lists present challenges for SMEs. So whether it's a tax clearance, whether it's a business plan, whether it's a cash flow forecast, whether it's a valuation, especially the number ones, because not all entrepreneurs are number people, especially the more technical entrepreneurs. And so you find that you have a very good business that should get funding, but is stifled throughout the process in a long-winded approach of trying to get all of the documents that are required to make a decision or to reject a decision. And so what the first issue that you have is before the funders before they even look at your application, they want their shopping list to be fully submitted first. So they don't even look at your credit score card or whatever the case might be before you submit the full list of items that they require. And so normally what you have then as funders, you have a lot of people that are applying for funds, or lots of small businesses that are applying for funds, but very few small businesses coming out of the other side of the application process. So you've got a big bottleneck on the application side of the business. And that's why you find that even application process and application forms for many of our DFIs in South Africa are stagnant because we have so many people applying and everyone is caught in the middle, or caught inside that process where the funders are then trying to follow up on documentation and so forth, right? The second problem then happens where the entrepreneurs themselves cannot deliver on what the funder wants. So for example, the funder might say, we want a business plan in order for us to advance you this 100,000 Rand to build your minimum viable product. Or we want financial statements, a business plan, cash flow forecast, and evaluation of this business before we can advance you, R1 million in funding and above, or whatever the case might be. And so the guy says, okay, well, how much does this thing cost? And the accountant will promptly tell him the answer of say, well, this is going to cost you 30,000 Rand, 40,000 Rand, this shopping list. So the first problem they have is, well, I don't have this 40,000 rand to begin with. But the other second problem is that a lot of these documents, sometimes they themselves think they need at this current present moment. So if they pay for it and they don't get the funding, it becomes an opportunity cost, right? Because it doesn't mean that if you pay for the business plan, you pay for the cash flow projections, you will get the money. And so you've got this problem between the SMEs not being able to build out this list of documentation, and you've got the funders with their rigid application processes, right? And therefore, where we come in the middle is this pre-investment stage, where we are saying that obviously that people will apply through SM Tax for the actual funds. SM Tax will then do the due diligence in stages and easier stages. For example, one of the things we would look at is a credit score. We don't need your bank statements, financial statements, and all those kind of stuff to look at your credit score before we tell you your credit score is too low. So don't even spend money, for example, on the business plan, the financial statements, or whatever that case might be, before you get there. Or we might say, well, based on your current trajectory, your business won't qualify in any event based on your current cash movements in the bank account, or whatever the case might be. So we then almost simplifying that pre-investment support phase, and are then getting our fees not from the SME, but from the actual funder who then ends up dispersing. So what you would then have is you would have the funders investing in SM Tax a certain pool of capital to run this pre-investment support on their behalf, and then we would then get upside as many applications that go through as possible. So from our perspective, we've already been paid by the corporate, so we don't have a conflict of interest issue. But on an upside perspective, we are then for the SME to help them as many SMEs go through that funding journey as possible, so that they can obviously get funding. So that is the first area we look at. So we're helping SMEs who ordinarily don't meet the criteria for the shopping list get access to that shopping list, and therefore get funding, or move through to the credit committee, right? And then post that is certain funders would have what we call CPs, or condition precedents, or certain covenants that they want, either before they give you the funds, or after they give you the funds, they want regular, let's say, for example, covenants like management reports and financial statements on a monthly or annual basis, respectively. And therefore, we would then come in to provide that support as well to the funder, to help the funder obviously get insights into your business around how well you're performing financially, so as to obviously help them make more informed decisions around whether they should give you more money, or whether they should chase you a bit harder around their capital. So that's where we play. We're really helping entrepreneurs get access to funding, and we're helping funders manage their sort of portfolio a little bit better. And so that we can give them a consolidated view around how their portfolio is performing. So those are the two.
Buchule, in terms of the numbers, right? Is there a range that you play within? For instance, Cuma said 1 million to 5 million. You are basically solving, right, the problem that came up when we were talking last time. Especially around when I think Unomfundo in the NEF, where she indicated, and people are complaining about the turnaround time, say 3 months. You wait 3 months, you have a back and forth, and then after 3 months, you've been waiting and following up, and then you find out you're unsuccessful, you've done all these things. So, and then she said, there are so many funding requests that come through, but they have limited capacity. And also what people might not understand is that they have to be self-sustaining, which means they carry the risk of, if they've got a fund of, let's say, 1 billion, whatever it is, I haven't looked, right? They have to keep that 1 billion. If they fund someone and it, a certain portion of that, and it doesn't come back, it means they have less to distribute to other people who may be in need. So it causes them to be quite strict in terms of choosing the business that they're going to fund, but also it means that they are a bit slower in processing those. And therefore she called for people to educate themselves, to say, know what's out there, but the question also said, or the contact came, some people don't have access to some of these things where they can access all this information, whether it's the internet, data, or whatever the case may be. So I think you come in at this perfect space because you help people to reduce that frustration of applying and spending money and then not getting the money after all. Whereas you tell them at the very beginning. But tell me now, what are I think number one, what are the numbers that you work with in terms of the funding that's available? How small, how big? And then number two, the turnaround times, before you, especially at the beginning where you say, this is your credit score, whatever the case may be, therefore, chances are you can't even pass stage one, just those two questions first quickly.
Yeah, so what the beauty of SM Tax is that, or what we do, because we do it for multiple funders, is that we don't have a set criteria. So you would have your what we call the specialized funding that will play in the 30,000 to 500,000 rand space. You would have your developmental financing that will play in your 500,000 to maybe 5 million rand space, and then you will have your banks that play, well, the banks play wherever funding, where the deal is good. So let's call it unlimited, but let's assume 50 million or 100 million. Obviously, the banks don't have a criteria as long as you can pay it back. And so we look at the full value chain. But what we would then do is we will say, based on your requirements, you fit this particular funder, or you fit these two funders, but let's go to this one first. And then because they have maybe less stringent requirements than this one. So let's try here. If you get it, great. If you don't, we'll move on to the next one. And so the decision or the answer you might, it would depend on how far along you get in the project progression. So I'll give you a case in point. One of our new sort of guys that we're helping now get funding, he comes from a 4-month process. And the reason for his rejection, after 4 months of back and forth, is the fact that his credit score in his personal name had an adverse finding, right? Or one of the other guys is that he had a when he was 19, he's 40 now. When he was 19, had a drunken driving thing on his criminal record check. And so we would say, oh, it's quite an unfair process to go through for 4 months to disqualify me for something that could have been checked quite easily, so right at the beginning. So a deal could go through within 5 days. I think the one that came through today, the latest one I did, it took 5 days, and it was a 200,000 rand deal. And maybe the more bigger ones, like the R1 million ones, will take maybe a week, 2 weeks. Because ultimately what we are doing is, if you look at the example of that NEF that you made around this congested application process, is we become effectively the agent. So we then bypass whatever that agent is doing and all those workloads that they might have from their own existing clients, and effectively goes directly to credit. So we are going from application vetting to underwriting, which is, in this case, underwriting being the credit review, where the credit team of the actual organization makes a decision. So you're almost bypassing the interactions with the analysts of those companies who might have capacity or no capacity at all.
And really what I'm hearing is that you and Nomfundo have to have a conversation because you are solving a problem that she might be having, right? By providing an outsourced form of capacity to evaluate some of those things, especially evaluating the key things that are easy to determine or find out at an earlier stage, and not looking at them later on because you want to see the entire pack of documents before you look at the application. But if you know already, okay, these are the things that are automatic disqualifications, you can check them on someone else, then the person doesn't have to spend money on these other things and getting this pack together if, they were never going to get the funding anyway, something like that. All right.
So maybe if I can come in there, then say, what's critical then of that is what we would then say is that there would be a rehabilitation process. So you would say, okay, well, you didn't qualify because of this particular reason, or you're not going to qualify because of this particular reason. Say, for example, your sales are too low, right? How do we help you improve your profitability over the next 3 months what advice can we give? What kind of professionals can we link you up with to help you improve your profitability for the next 3 months so that we can take you to the funder, because you will then qualify. So almost our view would be that by the time we take you to the funder, we should have a very good sense of what the outcome will be. So we shouldn't take your application for credit vetting or to a funder if we believe that, or we feel that it won't pass. So it's up to us to do the rehabilitation process. And that process is also then covered by that particular funder as well. Because ultimately funders want to deploy capital, right? So the phenomenon that they reject more businesses than they accept is a negative key indicator on their side. So if they've gotten 1,000 applications and they were only able to deploy capital to 50 of them, the CEO of that funder needs to look at the credit team and almost go, all this money, all this potential that we've lost. So they want to deploy capital. They don't want their capital to sit on their balance sheet. The issue is, like you've rightly put, that the capital, before it moves out of the door, must have had all these check boxes met, because that is how they guarantee that the money will, well, they can't guarantee that the money will come back, but at least gives them some sort of comfort that the money will come back.
Buchule, you are finishing all my questions ahead of time. But I think it's very wonderful information that you are giving, and it's a very great perspective, because the relationship between the person who wants to be funded and the person who has money to fund. I remember reading a year or two back, right, one of the funds saying, well, we had to return, I think it was 80 billion or something back to the national treasury because we couldn't find viable projects, right? Now here's government trying to increase the number of entrepreneurs that we have, because entrepreneurs are supposed to create employment, but now the funding and the means that government has put in place to give, to grow this economy, these SMEs, they are saying we can't find good projects, right, of businesses to fund. And you are telling us that, it's not necessarily because their businesses are not there that are, that are good, but it's the fact that people have got good ideas, but they are not technical, or because the model that is being used, it's stringent and it does not necessarily, bring the two together, because the funder is the service provider and the person wanting funding is really their client. They want to sell this, right? Yeah. But on the other hand, they don't want to lose money by giving money to someone who doesn't have a good business or who won't be able to give that return, or to return that money. So, Cuma, let me come back to you, right? Let's go back a bit. You mentioned BMF a couple of times. Just tell our audience what is the BMF, who is the BMF, and what is the relationship between INSEGA and the BMF? And then after you've taken us through that, you can tell us some of the things, in terms of what are your criteria when you're looking at funding. I know you talked about, for instance, the untransformed, right? Untransformed sector. So where exactly, if you can give us examples when you talk about those and some of the things that you would be looking at before you consider the funding. Okay, thank you.
Sure. I can definitely do that. So the Black Management Forum is an organization of Black professionals who are seeking to move the needle on socioeconomic transformation in South Africa, founded in 1976. A thought leadership organization, also here advocating for the transformation of corporate South Africa, right? All began by managers in the 70s who were in managerial positions, de facto managerial positions, running teams, but aren't allowed to be called managers because they were Black. And then evolving into an organization of Black managers who just want an opportunity to be in those positions and to make a contribution within South Africa, the corporate landscape here in SA, drivers of many legislative initiatives which may have led to things like the Employment Equity Act, based out of the Employment Equity Blueprint, and the establishment of the Commission of Employment Equity. So a lobby group seeking the transformation of corporate South Africa, thought leadership in the sense of lobbying and engaging with the policy space in order to be able to protect the gains and also improve on them as we grow as a democracy. And also try to create spaces of opportunity for Black professionals and Black business owners. And so I think this is where the BMF is right now, an organization that seeks to create an environment where there's opportunity for Black entrepreneurship and for Black professionals within corporate SA, moving along from seeking inclusion or recognition, right? So began by our seeking recognition, in the 90s seeking inclusion, and I think now where we are in terms of an organization in our growth, it's an organization that is seeking opportunity for Black business people. And the relationship with Ntsika comes from a resolution that was taken at a conference of the BMF in 2018. And this resolution was taken out of a realization that the membership profile of the organization was becoming a little bit more entrepreneurial. So ordinarily, we'd have a lot of Black professionals who are employed in corporate or managers or directors within corporate proper in South Africa. But what we began to see is that there's a growth of members who are entrepreneurs, starting their own businesses, who are trying to compete in this economy. And we needed to create something that would accommodate those, because what we also saw is that access to finance, access to markets was a difficulty, particularly for Black-owned SMMEs. We have an SMME desk which championed this resolution, coming from the provinces, of course, who are at the coalface of member engagement. And the resolution was to establish this fund. And what this fund would do would be to be able to assist Black business people. One, access to finance, of course, and also leverage the BMF's relationship with corporate SA and perhaps plug those into value chains where appropriate, and try to support Black-owned businesses in that way. Also then, of course, being able to accommodate what was a changing membership profile. And so that's how it all began, and that's what the relationship is. And so the Black Management Forum is the shareholder of Ntsika Investment Managers, which manages then Ntsika Impact Fund. And the structure in which we have taken is that of the private equity fund structure, where you have Ntsika Impact Fund as the general partner, and those that invest in the funds become limited partners. There's a pool of capital, which we deploy to SMMEs and businesses that we find in our deal pipeline. And as an early stage investors, we're basically finding business plans or pitch decks in the main. Yes, there are businesses that we're looking at or having conversations with as we raise the fund, because you have to do both. Investors want to see that you have a deal pipeline, as Buchule said. Investors want to deploy capital. They don't want to give you money that's just going to sit in your bank account and do nothing. We also have to develop a pipeline at the very same time. And yes, we are seeing businesses that are a little bit more mature, post-revenue, 2 to 3 years, maybe 4 years in some instances. But a large majority of the businesses that we're coming into contact with are at that really early stage, right? They have an MVP, they have a few customers, some are even pre-revenue. And so what we're really looking for and who are really backing is the entrepreneur himself. When it comes to the business, I think the key criteria for us is that we are looking for businesses that have, and I saw in the last program that you had, the gentleman from Edge Growth spoke about product market fit, right? You've taken this product to the market, consumers have responded positively, you're generating consistent revenues from that business. At the stage upon which we're investing, I think what becomes crucial, or what is a key indicator for us, is if the entrepreneur has achieved what we is termed language market fit. Now, what that means is that they are describing their business, their product, or their services in the way in which the consumer experiences the pain point, right? So the entrepreneur is in love with the problem and not in love with the solution that they've brought in, because that improves your chances of finding product market fit later on. It's an indicator that the entrepreneur has engaged the consumer, they understand the problem, they understand the pain points, And they are communicating their product, their service, their good in a way in which the consumer experiences the problem. And I'll give you a classic example. Entrepreneurs in their business plans or in their pitch decks will often list features, one feature after the other. Now, a consumer does not see their problem or what they're going to purchase, or do not think of them in terms of features. They think of them in terms of the anxiety that that problem causes. They think of it in terms of the challenge that problem creates for them. Or they think of a good or service or a product in terms of their goals and aspirations as a human being. And when you understand that, the way in which you communicate your product and your service changes as well. Now, there can be a product, for instance, let's take Canva, right? Everybody who's got a side hustle or is a digital content creator, in one point or another has used canva.com to create their posts and then the like, or their marketing materials. Now imagine Canva communicated their product in terms of the sophisticated technology that they use to suggest designs to you. AI generated marketing collateral. But what they say in most of the ads, if you go on social media and you come across them, is they say, create a post in 5 minutes. Easy, or create a video for your small business in 4 minutes. Or easy templates to use for you to be able to create your content for whatever relationship or for whatever product that you want to bring or whatever content you want to upload onto your social media platforms. So for us, one of the key indicators initially in coming into where we invest in is that language market fit. Do they understand the problem? And is the solution addressing that problem? Rather than somebody just trying to show us that they've come up with a brilliant idea and they are infatuated with the features of it, because that gives us a bigger chance.
And Cuma, you mentioned earlier as well, and I'm just mindful of the fact that we're running out of time. And because I really want us to also focus on the practical side, how do people apply? Where do they go?
Yeah.
That's going to be my next question for you. And
sure.
But you mentioned earlier that consumers have validated the idea. How do you know that consumers have validated someone's idea?
So some of the tools that we do is that, have you had consumer interviews and what has been the feedback of those? Have you run surveys around what your product idea is and what has been the feedback there? Do they understand what the product does, the good or the service, what it does and what it means to address? Have you spoken? Give us evidence. And there are different tiers in terms of the evidence or the weight of that evidence to show us that you have gone through and spoken to who your target market is. And from that, can you describe to us what your ideal consumer profile looks like? Now, some people like to communicate that in terms of ranges, saying my consumer is a professional between the ages of 25 and 35, and they do this and this and this and this. But the more detail you can provide about that consumer profile, the greater the weight of that evidence that you understand, one, your target market, and two, their pain points in terms of the problem you're trying to solve with your solution, your business, your good or your service. So that's how they can give us an idea and whether or not they have validated the idea with their target market.
And what kind of evidence would you be looking for? Would you want transcripts? Would you want, what kind of evidence would you want, in terms of saying talk to?
Yeah, so always the first thing at first glance is that ideal consumer profile. How well articulated is that and how much detail is that in? That's the first indicator. The second, what are the results of either that survey or those interviews? Necessarily, or the transcripts, we don't necessarily want to know what they've said word for word, but what are the dominant themes in terms of how they describe their experience with your proposal or the problem that you're trying to solve. And then we can evaluate the solution and say, does this meet what is being said about what is being proposed here?
All right, no, cool. Thank you, my brother. The next question, and I'm rushing now because we're out of time, right?
Sure.
Is really around the practical application process. And Cuma, the other question that you just tried to wrap it up was, Buchule told us, when people apply and they're not successful, there's a rehabilitation process. No, we don't leave you to your own devices. Here's a viable idea, just because technically you couldn't get the right things right.
Sure.
Doesn't mean that we should lose the idea. Let's give it a chance. So just tell us the application process. How do they apply quickly? Maybe 1 or 2 minutes. And then what happens to people who are not successful for whatever reason? And then Buchule, I'll give you a chance, take about 2 minutes as well from your side. And then Uzola's got his hand raised, which means we've got something from the audience. We want to cover that as well. Okay. Cuma, you go first.
100%. So on the website, there's a tab there where you can know more about your business. That will lead you to a deal review form. And you fill that out and you attach either your pitch deck or your business plan. And we get in touch with you as soon as we received it for an introductory meeting. And then we just have a closer look at what you've got in terms of your business, how far you've come. Do you have any traction? Do you have any of the collaterals that we might need to make an investment decisions? But we spell all that out in that initial chat as well. And when people aren't successful, or and I've reviewed a lot of pitch decks from the time that we've started communicating to the market about what we are trying to do here, is I try to give a lot of feedback in terms of where the shortcomings were, in terms of what I didn't see that I expected to see, and also make recommendations on what kind of accelerator programs that can assist with that. Starting out, we may not have the capacity to be able to run our own rehabilitation, and we might even have a chat with the Buchule and send some people his way. Now that we've learned the full scope of what he does, but we like to give that recommendation. Visit this, have a look at these guys who are running this program. We think it might be suited. This is where I didn't see what I needed to see in order to be able to take that process forward. And we generally don't like to take a long time in order to either to get back to the people or to get to a stage where we can say, look, I'm now going to take this business to IC, and you're going to be part of our pipeline when we start deploying capital once we've achieved our fund establishment. But in terms of post-investment, we are trying to create an ecosystem of partners in order to be able to provide that once we've deployed the capital. We want to be a hands-on investor as well, because we're at the early stage. So where we can add value and where an entrepreneur can tell us, I want Bbgi to fund me because this is where I recognize Bbgi can add value. That's always a plus, because we want to be able to play a role in that way as well.
All right. And I mean, deployment of capital simply means that we give you money, right?
Yes.
Okay. Now, no, thank you for that. I mean, it's wonderful because when you say accelerator program, right?
Yeah.
Edge growth, Pilani said the same thing, you know? I mean, I've got so many questions, but we've run out of time. For instance, I want to ask, where does this money come from? Who's the investors? People, sometimes they'll say foreign direct investment, we need foreign direct investment. You know, some people complain, well, you know, funders in South Africa or, you know, fund institutions are sitting on cash because they are risk averse, you know. So you get these mixed messages, like we need money from outside people investing in here. I think you're like, you know, isn't there a danger that they might try to influence us, they might ditch us when they feel, no, things are not to their liking. Then you've got other people saying, but there is money, but the people here are not investing. So why would people from outside come invest? So that's something, and probably we'll do it next year, that conversation. And also the conversation that we're probably not going to have today is around the post-investment. That's something that we'll have next year as well, because I think the key thing now that we're focusing on, how do people get in, right?
Yeah.
But please, one thing I would definitely want to talk about is purchase order funding, right? I think for me, the people that I interact in my coaching, in my whatever, business coaching and other, there's a lot of that stuff coming on. So we'll talk about that. Let me give Buchule a chance and then I'll come to Zola from the audience. Buchule, quickly, just one or two. Unmute.
So
we're used to this by now.
So we have a two-pronged approach. You can either apply via email, which is funding@smtax.co.za, or you can go to our website, which is smtax.co.za or www.smtax.co.za. And there's an automatic onboarding process. So we verify ID number, business account, and so forth. The first document that we'll ask you for is, we'll first ask you for digital consent to run your credit score. Then the second document we'll ask you for would be your bank statement. That would be it for the first phase. Once you pass the validation from bank statement, we will then run the credit score. Once we've passed the validation from the credit score, we will then send your deal through for first phase deal approval. If your deal is approved based on the bank statement and the credit score, you'll get a provisional offer pending review of certain documentation like your ID and proof of address and so forth. If you fail, we will then ask for more documentation, like your financial statements and so forth, until we get to a point of understanding why you are failing the process, and then we'll come back to you and say, this is the area of improvements, and this is the journey of how to improve that through our own accelerator program, which we have in-house. So that is it in a very quick 2 minutes, as I.
Okay. Cuma, your website, you didn't mention your website quickly. Before we go, Zola, you are after Cuma immediately.
intsika-impactfund.co.za.
Intsika, for those people who are not Xhosa speaking, it's INTSI, right?
Yes, that's correct.
INTSIKA. Or Intsika impactfund.co.za. Zola, questions and comments from our audience?
Thank you. I have just one. I think you have asked the other ones. One was around post-funding, and the other one was access to our panelists, which were the emails. The last one is directed to Intsika. Someone says here, how target audiences are identified has changed over the years. Are you guys aware of that? i.e., they said there was a time when DSTV had a particular target audience or a particular person that they had in mind. But now if you drive around South Africa, you go to a squatter camp or an informal settlement, there's satellite dishes all over there. The same way you'd find the same setup in certain. So now in cases like those ones, where really a product is designed for whoever can afford it, do you guys consider such as a definition of who the target audience is? Thank you.
Okay, thank you so much, Zola, and thank you to our audience. I want to remind our audience and people who watch this video afterwards, you can still leave your comments and we'll make it a point to address them at our next event, okay, our next webinar. Cuma, over to you. And then after that, I will talk a bit about purchase order funding, and then we'll do our closing remarks.
Sure. So a best practice that I've come across, which I think is quite useful, and particularly I think would be useful to entrepreneurs who are preparing applications, particularly for early stage investors, who rely on your knowledge of the market and of the target audience in order to be able to make a decision or to make an assessment of whether or not your business is fundable for them or meets the criteria or meets the objectives that they're trying to achieve with their fund, is tell the story of the trends. How has the consumer evolved? And at what stage are you going to be engaging with that consumer? Yes, there might be a movement in terms of what was once designed for a particular consumer profile that now applies to a different consumer profile. But along that journey of that consumer, where are you engaging with them and who are they at that point? So telling the story around the trends around your market, how it has developed over the years, tells us, yes, you understand your market and also where it's going based on what you understand from where it has been, and who the consumer has become, either growing with that product or service, and how and where, and in terms of where you're meeting that consumer, what problem at that point are you solving for them, or what value are you providing to their lives, or how are you helping them achieve their objectives? The more you can tell us about that, the easier it is for us to build conviction around your business as much as possible, even as much conviction as you have around your model. But entrepreneurs need to do the legwork in understanding and in telling the stories around the trends around their market, where they're entering that market, at what stage of that development, and what does the consumer look like at that particular point in time, and where are they likely to look like in 5 to 10 years, which is our investment period. And if you can tell us that story, so give us an idea of what you think that looks like, then the snapshot that you give us now might be easier to believe if you understand that you know the journey that that consumer will take and how your business will evolve with them. So what I've seen with a lot of entrepreneurs that are really great at raising money for their businesses round after round is that they truly understand their market, they truly understand the consumer, where they come from, where they are, and where they're meeting them in that development, and where they expect the consumer to be, and how their business will also evolve with them. I think at this point in time, with the information that I have, it's the best way I can respond to that question. But I'm happy to have that conversation in more detail at another time. But trends, where is it going? Where are you engaging the consumer? Where do you think they'll likely be as your business grows? And how will you grow with them is an important story to tell if you are coming to us with just a pitch deck or with just a business plan to be funded.
Thank you so much, Cuma, for that response. And thank you to our audience for the comments and for tuning in and engaging with us. Now, closing statements, but before we close, I just wanted to raise something which we will probably talk about next year as well. And that's around purchase order funding. I don't know if you guys are involved in that, but I think this is something that if anyone is watching, it's quite a big issue. Purchase order funding, as I understand it, is that someone has got a contract, someone has got an order that has been placed by a customer, right? To say, I need you to deliver 200 beds to this place, to this hotel, or to this, whatever you want to call it. But the person says, I've won this business now, but because of certain cash constraints, I don't have enough money to be able to get what I need to be able to deliver it, right? I've got a shortage somewhere. I just need 50,000 so that I can deliver this thing within 2 weeks, within a month, I'll be paid, and I'll be able to pay you back your money, and I'll be able to keep some of the profit, and I'll give you some interest for bailing it out. Now, the reason this is so critical for me is that I'm coming across a lot of people who are falling into the hands of omachonisa. I don't know what what is omachonisa in English?
A loan shark.
Loan shark, yes. They're falling into the hands of loan sharks who basically, I came across a story of a lady who had a business and it was successful. She was supposed to make about 20-25% profit, but the loan shark took about 18% of that profit. And what it essentially meant is that she got business, she worked, and then she gave most of the money to the loan shark. And this is a big issue for government. It's a big issue for South Africa as a whole, because now families that are supposed to be becoming richer, again, that 8% that that person is able to keep, they can only then be able to live from hand to mouth, and they'll always go back to that loan shark. And when you try to extract these people from the loan sharks, because they take their bank accounts, they take this, they control everything, right? It becomes very difficult to get that people out of that situation. The loan shark just controls everything. And, in some instances, they become very, very ruthless in what they are willing to do to keep that person locked in that situation. So it's a very urgent situation for anyone out there who's able to do something. I think also I've come across a number of people that have been able to refer people who need this kind of help, but in a way that helps them to do this thing, but with partners who say, you shouldn't be coming back to us every time you have something. Therefore, they also educate and help them on how to manage their funds so that when they make money, they're always reinvesting in their business. So if you are someone who is in that situation, send us an email, info@bbgi.co.za, that's entitled Purchase Order Funding, okay? Info, as in like information, but info@bbgi.co.za, okay? So that we can link you with people who can help you with that. And perhaps in future, we can see if they can come onto our webinar as well. Gentlemen, closing statements, 1 minute. Buchule, over to you.
There you go. Thanks. Maybe just quick to mention that the purchase order funding is something that we also run through SM Tax. So we've got a partner for that, and we're quite excited to deliver that product. And like I said, SME funding and is one of the critical conversations we need to be having as a SME ecosystem. obviously bringing the partners involved. And so we thank you and your team, Sazi, for organizing these kind of sessions. It does bring a critical conversation to the forefront and allows people and SMEs and entrepreneurs to get more information around where to go when they do need capital. Because capital is also one of the lifebloods or lifelines of a small business. And so ultimately, yeah, there's some tax from my side. My team, we're passionate about assisting SMEs get access to funding, and we'll work hard and hand in glove with organizations such as yourself and DFI and other partners to achieve that impact. So from my side, thanks for having us, and thank you for moving the needle around the socio-economic issues that we have faced as entrepreneurs in South Africa. Thank you.
Thank you so much, Buchule. Thank you. Cuma, from your side?
Yeah, I guess just two things from my side in closing. Buchule, is to say to entrepreneurs, if you're solving a problem for a consumer, you've taken the time to get to know really well, you'll have a sustainable business. And those businesses are generally easier to fund. And the second is to always do your research about whom you're going to get funding from, so that you can respond quite specifically to what that funder is looking for. I think we've spent just a little bit more time on those two things. We can really start to move the needle, as it were, on the funding challenge for SMMEs, Black-owned SMMEs more specifically. And I can't reiterate it enough. Solve a problem, particularly a socio-economic one, and you'll have a partner you can rely on.
Thank you so much for that, Cuma. From my side and the Black Business Growth Initiative team, I think, I hope you can see what we are doing. We are basically, when we talk about collaboration, when we talk about the fact that there's enough for everyone, when we talk about, uniting around these things to solve these common problems, that's what we're doing here. It's not a coincidence that we had the NEF. It's not a coincidence that we've had the people we've had on this panel, and that in future we are going to continue to tackle these things. But my key takeaway today is the fact that funders want to give money. That's their business. When the money sits in their bank account, they are losing out. Or Cuma, or Nomfundo, Pilani, their performance indicators, how their performance is measured, is according to how much they are able to fund small businesses. So they are looking to give you money, so don't be shy, right? The only problem is that there are so many people looking for funding and so many bottlenecks in the system because people there isn't much clarity on what they need to submit, and things go back and forth, that things are a bit slow. So don't be shy to go out there, but what Cuma has just said as well is very important. To make it easy for funders to give you money and to feel comfortable so that they know that they don't lose that money when they give it to you, they can trust you, right? Make sure you do your research, make sure that whatever you do it thoroughly, but also don't despair. There are people like Buchule, there are people with rehabilitation accelerator programs that say, if you don't meet the criteria, we are here to support you so that you can meet those criteria, because you are solving a problem that South Africans have, then you are the type of person that we want. You are part of the rainbow's, dream that we had in 1994. And when you succeed, the country also succeeds, the funders succeed. So we'll see you next year. We'll probably, be having our first event either at the beginning of January or early in February. We will communicate, stay in touch, keep liking, keep following, keep sharing even this video with your friends, your family, other people who couldn't make it. And even if you watch later, leave your comments, your questions. We'll definitely follow up on them. We still want to talk about post-investment support, i.e. the support that you get after you get the money. It's not just giving you money. Buchule said not all entrepreneurs are technical people, are numbers people, right? Some people have got good ideas, but they know that idea. Therefore, to help them to even run a business and to make it sustainable and to increase the impact that it has. Join us next week. We're going to talk a bit more about purchase order funding. Buchule said is there. You know where to go to get that funding. insicaimpactfund.co.za, smtax.co.za, /funding. But if you go in there, you'll be able to find it. It's very interactive. I've tried it out. I've seen it. So ladies and gentlemen, thank you so much for joining us. We look forward to seeing you again next year. Stay safe, enjoy, rest, enjoy time with family, travel safe. We want to see you back here next year so that you may have a wonderful and prosperous 2022. From the Bbgi team, and thank you to the guys who are not here but have been doing all this work. Bbgi team, thank you so much. From the legal guys to the marketing guys, website, financial team, thank you to all of you. Appreciate the work that you do, and it's really having a great impact. From our side, cheers until next time.